At the half year, I think there was some concern that our costs were a little bit higher than a normal run rate. And even though we said that was because we had accelerated some investment, people, I think, remained nervous. What we specifically said then was that in the second half, we saw the costs as being broadly similar to the first half, and we have now come in with lower third quarter costs than in the second quarter, and in fact lower year on year. So the reaffirmation that we expect to be very much in line with the first half costs in the second half, I think the market has been pretty receptive to.
In terms of the sort of bigger macro picture, HSBC said recently when they reported that the impacts of the trade war hadn't yet fully manifested itself in business activity in a meaningful way. Your guidance going forward on that topic fairly gloomily. So sort of sum up where we are at the moment in terms of how much big a hit there's been so far and how concerning it is going forward, these trade fears.
Yeah, we were trying to be realistic rather than gloomy. I think what we are seeing is clearly a lot more talk about just where do the tariff wars go to. And in a small part, we have seen some reduction in some of the capital markets activity. But I still think it is fairly early days. And at the heart of this, many of those countries, consumption levels are still holding up. This is probably more about the flow of distribution. And for us in particular, having a very large presence in Asia, if there is some change in flow between China and the rest of the world, actually we're very well positioned to actually benefit from that.
And the headline, of course, is that trade with China is getting worse. But you, in fact, recently were one of the first foreign banks ever to be granted a license to be a custodian of Chinese assets in China. So that suggests, in fact, that the longer-term trend of China opening up for financial services is still going on and improving. If you'd been a US bank, do you think you would have got that license? Is it more of a US-China issue, but it is opening up for the rest of you?
I don't know which other banks might have done. All I do know is we have actually been present in China continuously since the 1850s. We are one or two big international banks, non-Chinese banks, who are based there. And as they push, as you rightly say, towards being more open to the external world, we think that really does play to a strength that we have got. And we have been playing and working on that for many, many years. And the performance of our China business recently has been very, very strong.
Clearly, as we touched on at the top, strong set of numbers and the shares up. But the wealth management number, perhaps a little disappointing, falling for the quarter. Is that down to the recent market volatility? And what's your view on whether that's likely to continue?
Yes, some of the wealth management performance is clearly market related. We had a fantastic first quarter for the year, as the market did overall. And then obviously as confidence in equities has weaned a little bit. So that has impacted upon our results. I mean, it's still a very big profit contributor to us, but it has moderated a little bit in most recent quarters.
And the main driver there is trade fears, you think, for the market volatility or interest rates?
I think it is the indirect consequence of people wondering on trade fears what that does to stock market prices, and hence just being a little bit cautious about where they're investing their money. So I think there is a sort of cycle effect that goes through from the tariff discussions through to that.